Good day, and welcome to Currencies Direct weekly podcast for Monday, the 27th of July. Riding the wave of risk-on sentiment, the local unit touched 16.35 against the US dollar on two separate occasions last week, and now opens the week at 16.55 as the tide appears to be shifting. Fears of a second wave of COVID-19 infections, coupled with US-China Sino tensions, has put a dampen on risky assets, as investors flock to the euro as well as gold. Over the weekend, there appeared to be increasing evidence that COVID-19 infections are on the rise in countries that are believed to have passed its peak. This includes China as well as Australia. Furthermore, Hong Kong has seen limited relief after escalating its lockdown measures and now looks to further increase measures in an attempt to stop the spread of the virus. South Africa is not exempt and remains Africa's epicenter, now fifth on the global list with more than 445,000 confirmed cases. We can only hope that, as predicted, we are seeing the peak in infections, which should mean over the next few weeks, the rate of new infections should be dropping. Staying in South Africa, the South African Reserve Bank last week announced a decision to cut rates by 25 basis points, taking the repo rate to a record low of 3.5%. The move was made in an attempt to support the struggling economy. However, Governor Kganyago warned that monetary policy alone cannot spur economic growth and that wide economic reforms are required. Kganyago also revised GDP in 2020 to contract by 7.3% compared to 7% initially predicted back in May. The day ahead will be a telling one for the country, as the IMF is expected to deliver their decision on South Africa's application for funding to the value of $4.2 billion, the maximum under the rapid financing instrument. Only once approved will the contents of the letter of intent from government be made public. Elsewhere, the euro, along with the price of gold, seems to be on the up. Tensions between the US and China heat up, as the US ordered China to close its consulate in Texas last week. This is apparently in retaliation to China stealing US intellectual property. China struck back, though, ordering the US to close its consulate in Chengdu last week. This week, markets will keep a close eye on COVID-19 developments, US-China tensions, as well as the Fed's meeting on Wednesday. Expectation is for a dovish tone by Fed Chair Jerome Powell, with markets on the hunt for any possible changes in September or Q4. That's it for this week's edition. If you'd like to chat about any of your currency requirements, please get in touch with us on 021-418-0105. For Currencies Direct Weekly Podcast, my name is Justin Ludovic.